Takes us to our talk of the tape. The road ahead for the markets with tech once again apparently in the driver's seat. Let's bring in SoFi's head of investment strategy, Liz Young, and she is here at Post 9. Good to see you.
Good to see you, too.
So, I mean, healthcare is selling off a bit today, but to me, the big story just remains NVIDIA.
Yeah.
Because it continues to keep this market levitating, and it continues to keep investors positive, and specifically in the area of tech. I mean, even Apple was higher today. It turned down. We'll cover that in a little bit. But NVIDIA, unbelievable.
Yeah, well, and we've got this situation, too, where you've got econ data that's warming up again. Some of the stuff that we thought was softening or that was problem areas like consumer confidence, consumer sentiment, PMIs last week came in stronger than expected. So we've got this heating back up and the narrative around maybe a recovery, another recovery in some of that softer data. So there's nothing right now to look at as an investor and say something's wrong. And even when you look at the market and what people have bought, we're not in overbought conditions. Nothing is screaming overbought. Not the S&P, not treasuries, not Bitcoin.
Not
even.
The NASDAQ?
Well, I think there are
we're
pockets.
over 17,000 today, right, for the first time ever. Now, it's come back a little bit, but you get my point. I mean, the money continues to flow into tech.
Right. Well, but even if you are in the camp that I'm in, where I think that we're in this elongated late cycle, what do you want to own? You want to own large caps. And in this particular environment, with yields where they are, and hopefully they will come down eventually as the year goes on, large cap tech and profitable large cap tech is the place to be.
That's what Goldman's Tony Pasquarello, I mentioned this on halftime, but for those of you who didn't hear it there, I'd argue that the reporting period justified the earnings season that just ended, justifies a claim that the Mag 7 remains the most durable and at certain turns the most convex set of stocks in the market. Said another way, this cohort displays ongoing elements of both the sword and the shield. To your point, offense, they work. Defense, they work.
I think what used to be the case, and what is different this time, even though saying that phrase makes me shudder, but what used to be the case, so if we rewind to the early 2000s and you looked at tech stocks, there wasn't that fundamental support underneath them. And we had valuations way higher than they are now. So there was a lot of multiple expansion and not a lot of support behind it. We're in a situation now where these stocks have worked for investors. So not anymore are they just these high beta, highfalutin tech stocks. People look at them as somewhat of protection and even some diversification away from old economy in their portfolios. But I would be remiss if I didn't mention some of what's going on today and what the risks are that still are out there for some of these stocks because of yields. So yields are up today, not just because of strong economic data, but because we had a couple really weak Treasury auctions. And that could continue to push things
right?
up.
The 2-year is approaching 5%.
Yep.
As we said.
We had a week 2 and a week 5-year auction. And then people, why does that matter? Because independent of inflation, independent of economic data, and independent of what the Fed is going to do, we've got pressure higher on yields, which just brings that tightening back into the conversation and lower appetite for treasuries, which is not good for our burgeoning debt problem and what the Treasury and the government needs to do to finance continued spending.
What do you make of the fact that investors continue to buy in? Okay. I thought there was a really interesting story in the Journal today. U.S.-based mutual and exchange-traded funds have drawn a net $172 billion of inflows so far this year, and that's a turnaround from assets flowing out of those areas over the past couple of years. So they're not, investors aren't as risk-averse, right? There's the money that had flowed through the money market system is now finding its way into the markets.
Yeah.
And that's fueling some of what you're seeing, NVIDIA included, you have to imagine. I'm sure there are investors who've been sitting in cash at 5% and say, gosh, I don't know, NVIDIA at 900, is it too late? NVIDIA at 950, too late? Maybe not. NVIDIA 1,000, 1,050?
Yeah.
It's like you have to be an auctioneer in that.
I mean, it's tough, right? And you're not getting a lot of hands up in the air at that point.
I think. The point is you are. That's the crazy thing. You are.
Well, so I think what will start to happen, if you look at what happened even just broadly in the market, we had that little pullback in April, and we're back up to slightly above where we were, but we've been kind of sideways since we recovered from that pullback. Now I think investors are going to start searching for other places rather than the ones that have been popular. So if you look at tech, I think what could happen, and this happened earlier this year, some of the old tech caught a bid. Some of the stuff that wasn't semis, just because it was like, I want to be invested in tech, but this stuff doesn't look like a good entry point anymore, so I'm not going to buy that. I'll buy something else that's adjacent, or things like copper, right? That's flying because we've got data centers and demand for copper into the future. Utes that are flying because of the same sort of theme. So I think some of these adjacent stories will catch a bid as long as the market continues to stay afloat.
You know what I feel like falls into that category is even within the Mag 7, Apple.